Hey, this is Chip Heimiller with Beacon Financial Strategies, and I want to spend a little bit of time just talking about the market in light of coronavirus. Things have been a little bit iffy here recently. I know that a lot of people may be worried or concerned or experiencing a little bit of anxiety, at least for now. But the point of this presentation is just to kind of reassure you, to let you know that everything's okay, no need to panic. Just wanted to run through a few things here with you to hopefully accomplish that. So what is the reason behind the stock market decline, apart from the obvious that coronavirus is kind of making its way, spreading through the world, really? The biggest thing is the uncertainty behind everything. How there's no cure for coronavirus as far as we know. There's no vaccine that can help people who are sick from the coronavirus. It's just this uncertainty that a possible pandemic can cause. And, at least for now, things are just uncertain. That's the best way to describe it, and the markets react to that. The other thing that at least I want to keep in mind a little bit is that there have been, and we brought this up in our client meetings here over the last 6 months or so, that stocks are at above normal valuation levels, which simply just means that, relative to historical norms, stocks have been priced at a very high level. And I just think that the combination of the uncertainty surrounding coronavirus, as well as this above price valuations, is just causing things to go a little bit haywire. So how does this uncertainty impact companies and really the economy at large? And to me, the biggest thing is possible changes in spending patterns. One of the things that's really the lubricant on the economy in general is spending. Families invest in cars and homes and home furnishings and trips and all of these things that have kind of a multiplier effect over time. And if that changes, then that changes kind of the trajectory of the economy a little bit. So it doesn't mean that it's going to go straight down. It just kind of means that maybe growth is going to slow a little bit. And it's hard to identify exactly the impact now that's going to have on spending, both in businesses and with families. The other thing is how is the coronavirus and really how people are responding to that going to disrupt businesses? And I can tell you that people are planning and expecting the worst. I mean, things as business closures, working from home, definite interruptions in business travel. All of those things are definitely happening right now. People are thinking about, okay, what am I going to do if coronavirus gets worse? What if 20% of the population becomes infected by this? And so those types of decisions are currently kind of playing out, and it's just hard to gauge how that might impact the economy going forward. There's also the chance that there are some supply chain interruptions. So as products are made, things like from anything from electronics to food to all these other types of things could have an impact on the supply chain. And so we just don't know how that's going to materialize. I think automatically the market, especially the stock market, kind of expects the absolute worst, and maybe that's an overreaction. Who knows? We'll find out sooner or later. But that's kind of what's going on, and really how the uncertainty that's happening right now is impacting, or is likely to impact, the economy going forward. So I think it's good to look at other scenarios that have played out in the past, just to see, what should we expect? I mean, no crisis is the same, but, there are similarities, especially in these two that are illustrated here in the graph. The SARS virus, which happened back in early 2000s, as well as the Zika virus that happened more recently, back a few years ago. And you can kind of see this purple line is really the market. It's 100% stocks. And so you can kind of see immediately on both situations as news was being released, as the media headlines happened, all of this projections of going forward, how it might impact the economy, you can kind of see their stocks declined, much like what's kind of going on right now. But eventually, over time, things got better. The uncertainty kind of blew over, and things got better and seemed to move forward. My hope is that something similar will happen with the coronavirus, and I believe that the odds are favorable for that to happen going forward. We'll see. I think this graph is important to remind people there are always going to be disruptions and shocks to the system. That's just the part of a normal economic cycle. And you see that, there's going to be uncertainty. There's wars, and there's, the terrorist attack, and all of these things that have created shocks to the system and generated uncertainty. And you can kind of see that, the dot-com crash, we saw a nice, 40% decline in the S&P 500. No fun. The subprime mortgage crisis, we saw a huge decline kind of leading into the Great Recession. But eventually, if you're a long-term investor, all that news kind of drops off, and businesses advance, stocks advance, and everyone kind of moves forward. I think this graph is important because it's really showing the most recent decline here, which has been over 10 years now, but the Great Recession, how bad things actually were. And you can kind of see here, kind of leading up through some huge financial institution bankruptcies, and just a lot of uncertainty with the banking system and real estate markets, and just tons of uncertainty there. And a balanced portfolio, which is this red line, like 60% stock, 40% bond mix, declined 40% or so during that period of time. And it was awful dire looking at that point in time, but you never knew when exactly the bottom was, and you could never plan. I can tell you that going through this period, there was all kinds of negativity leading all the way up to through recently 2013, 2014. There was tons of negativity, but the markets continued to recover during that period, and eventually investors were rewarded for taking that risk that they had. And so, my advice is to kind of hold tight. We don't really know when the bottom is going to happen, but eventually it will, and we'll move forward. So what should you do? Just really do not panic. That's the worst thing you can do. Try to avoid and ignore these negative headlines. I can tell you, when I go home tonight, I'm going to watch the news, and they use horrible words to describe what's going on. And at the end of the day, it really is one of those things that we have to endure in order to be rewarded long term for the risk that we take in the markets. So the biggest advice I can give to you, don't panic. Trust and stick to your financial plan. So if you are in this accumulation mode, if you are saving for retirement, continue saving. It's a great time. You're getting a better prices on stocks now than you did a couple of weeks ago. Continue that strategy. Don't make any changes there. Rebalance your portfolio. Sell the things that have done well. Buy these stocks that have declined by about 20% in the last week or so. If you're a retiree, again, depend on your conservative bucket. You obviously, if you are working with us, you kind of know, okay, this is what I'm going to be spending. These are the requirements for my portfolio, and we have already allocated a number of years in a conservative bucket to cover those withdrawals. There's no need for you to make any adjustments at this point. Just stay the course, and everything will be fine and blow over at some point. No need to be worried. I would like to say, please pay attention to your emotions. Understand how you feel. Understand how we all as humans get upset with negativity and declines, and seeing our thrift and sacrifice decline. But understand that that's a part of being an investor. But take note of that, because we can talk about that. We can go back to the drawing board and say, okay, maybe you can afford to take less risk in your portfolio. Now's not the time to make those adjustments, but now's the time to realize that, how this makes you feel, so that in better times we can make those adjustments. So hopefully this has been helpful in giving you some reassurance. I sure hope it has. I'm not worried about any of my clients. We just went through here recently and reviewed all of your portfolios, rebalanced many portfolios, and I feel like your guys are in a great position going forward. I have an awful lot of confidence in the investments that we own, so no need to worry. However, if you would like to touch base with us, give us a call. We're here every day, and would love to talk to you and provide some reassurance if we can. 919-803-3801. Thank you.